Alright guys, we are so back. Living Off Charts Private Mentorship Episode 4. Aligning yourself with the institutional order flow and day trading intricacies. Now, this is going to be based around a USD CAD call out that we gave in the Discord group, as you guys know. So if you guys are watching this on the YouTube or any other social, this is actually a private video meant for the private group, but I'm sharing it here with you guys. So take notes, yeah. So what you see here on your chart is the 3 trade ideas we called in the Discord group. Trade number 1 right here. We actually called this low here that we would expand from here. However, Tom was in the live stream calling this right here. So trade number 1 called here. Trade number 2 called right here. And trade number 3 called here. Again, once again, in the live stream. So that's what we're breaking down in this video. And yeah, let's get to it. All right, so the foundation and the basis of this video is going to be offset accumulation and reaccumulation if bullish. So what is offset accumulation? Offset accumulation is a stop run on sell stops below the marketplace to drive price higher to buy stops resting above the marketplace. We look for accumulation of sell stops when we are anticipating higher prices. Sell stops resting above a key higher time frame discount PDRA are even more significant. What is reaccumulation? Reaccumulation is the impulse price swing that occurs from a retracement after an offset accumulation, which is a run on sell stops. We want to position ourselves in a reaccumulation phase from the higher time frame to the lower time frame. By doing this, we confirm that we are on the correct side of the institutional order flow. Diagram here, offset accumulation, reaccumulation. All low right here could be in the form of a previous day, week, month low, could be a separate price swing low, could just be an older low. Increases probabilities if there's a discount key PDRA right here below the low. However, we run the low, accumulating all these sell stops. That is offset accumulation. Impulse price swing occurs after the offset accumulation. This is key. This is institutional sponsorship coming into the market, confirming this as offset accumulation. Once we have that impulse price swing, we wait for a retracement into discount PDRA, breaker, FEG, order block. Reaccumulation occurs at the discount PDRA for another impulse price swing. So the idea is to position ourselves with a reaccumulation phase from the higher time frame to the lower time frame. Bearish scenario, offset distribution and redistribution. What is offset distribution? Offset distribution is a stop run on buy stops above the marketplace to sink price lower to sell stops resting below the marketplace. We look for distribution after buy stops have been rated when we are anticipating lower prices. Buy stops resting below a key higher time frame PDRA are even more significant. Now, what is redistribution? Redistribution is the impulse price swing that occurs from a retracement after an offset distribution run on buy stops. We want to position ourselves in a redistribution phase from the higher time frame to the lower time frame. Positioning ourselves in a redistribution phase top down, higher time frame to lower time frame, confirms we are on the correct side of the institutional order flow. Diagram here, old high, previous day high, previous week high, previous month high, or a separate price swing high. We accumulate the buy stops above that, key high time frame bearish PDRA here, above the buy stops, increases probabilities. Impulse price swing, break in market structure. This impulse price swing confirms institutional sponsorship coming into the market. We wait for a retracement into a premium PDRA. This premium PDRA is redistribution. We want to do this top down to confirm we're on the correct side of the institutional order flow as mentioned before. And we look to ride the next impulse swing down. Now, what you're looking at your chart right here is an order flow sequence. How we confirm we're in a buy program and how we confirm we are in a sell program. So if we are in a buy program, we're going to have the monthly, weekly, daily, 4-hour, all bullish. If we are in a sell program, we're going to have the monthly, weekly, daily, 4-hour, all bearish. Each one of these right here would be in a bullish scenario. What is that bullish scenario? As mentioned before, you would be in a reaccumulation phase from top down, the monthly, weekly, daily, and 4-hour. to confirm you are on the correct side of institutional bullish order flow. Now, if we are bearish, we're going to have a monthly, weekly, daily, and 4-hour in a reaccumulation phase to confirm we are bearish. Anything below the 4-hour is an execution time frame. You cannot probe order flow on anything lower than a 4-hour. So anything below it is an execution time frame. Now, looking at the USD CAD chart here, this is where we call the longs, this candle right here. Last week, we called the longs here in the Discord group. On the higher time frame, this is a monthly chart. Offset accumulation occurs below an all low. It's a separate price swing in this case. Once we have that offset accumulation, we see price move high with an impulse price swing. We see institutional sponsorship come into the market with this large displacement higher, fair value gap. Then we see a retracement down into discount, running on an all low here as well. Once we have that retracement, we look for reaccumulation to occur. Price moving higher here. Now zooming into that monthly candle, that's this candle right here. We're in a reaccumulation phase on the monthly, keep that in mind. Now, on a daily chart, we have a discount low here to a premium high here. 50% is right around here. Anything below is a discount market. We have a order block here. Valid order block. Why? It's in discount, first of all. It's in a reaccumulation phase from a higher time frame, and it's a down close candle as we run liquidity and reject higher. So valid order block here. We see an all low formed here right above the key high time frame discount PD array. That's significant. Price runs that low. Offset accumulation now on the daily. So we've had offset accumulation, and this actually here is the reaccumulation phase on the monthly. And now within that reaccumulation phase on the monthly, we're seeing an offset accumulation on the daily, price trading higher here, and price retracing. Fair value gap here. This would be reaccumulation on the daily. You can see that right here. So reaccumulation on the daily now, while we're in a reaccumulation phase of the monthly. This is how you probe order flow and trade with the order flow. IBDA 20-day look back for day trading, bullish buy program. We're going to be focusing on a buy program for this teaching because that was the trade idea we called in the Discord group, and this is a no hindsight course. If you're bearish, you would just inverse everything mentioned here. Anyway, back to the bullish buy program. From the previous day of your trade idea, you count back 20 days looking back. Determine the high and low of that 20-day range. We'll be buying in discount or at equilibrium. Locate and annotate the bullish PD arrays in discount. A swing high must be broken through in the past 20 days. We wait for a previous day low to be rated, and then once that previous day low is rated, we target previous day highs within that last 20 days as a draw on liquidity, and a final objective being the 20-day high. Now, let's look at this right here. This day right here, this candle right here, is the day we call the longs on USD CAD. The first day, we called it here and here. Now, if this is the day we're going to start trading, which it was, we're going to start counting back the previous days from the day before our trade, which would be this candle right here. So this candle right here would be day number 1. So let's count back. Number 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So within the previous 20 days, what is the highest high? That would be right here. And what is the lowest low? That would be right here. That is your premium and discount range as a day trader. So as you can see here, premium, discount, that's the range. Now, going off what I just explained, premium above here, discount below here. Offset accumulation here into a key PD array. A swing high must be broken. We have that here. Displacement, retracement here, which is the daily charts reaccumulation phase, where we have located a discount PD array. Now we have to have a previous day low run, as mentioned here, in discount of the 20 days before we can look for higher prices, which is what occurred here. And this is where we call the longs, as well as here, which you can notice here. Interestingly, the bodies are respecting, and there's large parabolic price swings occurring from the 50, not random, right? Now looking at a 4-hour chart here, this is that daily FAG, the reaccumulation phase. And the target was up here at these highs here. Now, there's a reason for this. There's a very strong reason for this. And it's because there's exact equal highs. Now, there's relative equal highs here on this chart. However, they're not perfectly exact. And exact equal highs are a very strong draw on liquidity. Now, I've done something here, yeah? I've taken out the wicks from the candles. Now, this is something I've taught in the Discord group. This is something they know. And I've taught it, well, I've not taught it in depth. And I'm going to go more in depth for them in there. But that's only for the Discord group. However, I'm going to teach here as well what I taught the Discord group. Over here, we have exact equal highs. That's this here and this here. Without the bodies, they're exact. This makes it very, very significant for the algorithm to seek liquidity above these highs. Now, when we're trading and we're looking for draws on liquidity and we already have our bias to trade higher, we can take out the wicks of the candles to look for a very obvious magnet in price, which would be exact equal highs. Now, exact equal highs cannot be used as one candle and the very next candle, which you can see here, you can see here, you can see here. It's very prevalent. We need to use it as two separate price swings. That's price swing number one here. And then there's a second price swing here. That's two separate price swings. When you have exact equal highs with two separate price swings, it increases the likelihood of price drawing up to that level. Putting back the wicks here, that's these highs here. The bodies would be here and here. Now, keeping in mind that old accumulation here, offset accumulation, impulse price swing, that's this price swing from this high, from this low, to this high. Price starts to trade lower. There's a premium discount low here to a premium high here. Price trades to around 50%. This was called in the group by the OTE trader, which you can see right here. This low to this high, looked for 50% before longs to this high, which would be the IBDA 20-day high. That's 50% that OTE called is right around here. Now, when we drop into that 50% level here, we can see on an hourly chart and on a 4-hour here, we can see an offset accumulation take place. So now we have gone from an offset accumulation to a reaccumulation phase on the monthly to the daily, and now we're on a 4-hour chart right here. Zooming into the 1 hour here, that offset accumulation takes place. We see a slight move higher and we start calling longs here. These longs here were called by OT in the live stream right here as it was printing live. High probability here as we're in a reaccumulation phase on both the monthly, weekly and daily. However, on the hourly, we have a offset accumulation here, impulse price swing, and then retracement lower here. Longs were called here as well, fractalizing the offset accumulation, impulse price swing, and reaccumulation. And we can see that here. So let's zoom into this chart here. This is a screenshot from the Discord group. This low right here is where we anticipated higher prices to come in for USD CAD with the foundation of what we just explained previously. And as explained here, continuing with the longs on USD CAD, we called yesterday, on stream at the low of the day. Would like to see structure form after running this low for today's expansion. So we run this low here, longs called here, impulse price swing, retracement, longs called here, anticipating another impulse price swing. Price starts to trade higher here. Now OT is in the live stream for this one right here, calling more longs. Bang. Impulse price swing, taking us to those exact equal highs. Putting some lipstick on the chart here to clear it up. Offset accumulation here, impulse price swing, discount low, premium high. Price trades back into discount, reaccumulating at a discount P rate. In this case, it's a bullish order block. Now, to confirm our USD CAD analysis for bullishness, we need to have the foundation agree with us. That foundation is the US dollar, and that's right here. Now, this is a call out from the Discord group, DXY key level for longs. I will be watching this as we approach the daily order block. As always, I will update the chat and OT will be live streaming, which he did. Now this order block here set the stage for longs on USD CAD, and let's break that down. So on the dollar index, we have a discount low here and a premium high here. This is 50%. Anything below is a discount market. We see an order block here in discount. It's a key level. Why is it a key level? We're bullish. We're in a reaccumulation phase. 50% discount. Sell stops resting right above this discount PDRA key level. Now, on the majors last week, the majors consisting of Euro USD, Pound USD, GBP USD, and the USD CAD, which is the longs we called. While everyone else was in Euro USD and GBP USD catching a very small bearish move, which, you know what, they were profitable and, you know, good for them. However, we caught the largest expansion by far, wasn't even remotely close. Now, how did I call that? Why did I call USD CAD? Why did I ignore GBP USD? And why did I ignore Euro USD? And that comes down to the Canadian dollar futures analysis that I did. So a little bit of relative strength teaching here. We have a premium high here and a discount low here. 50% is right above here. We see price being quite choppy, accumulating. And then around the 1st of July, which is a new quarter open, hint, hint, price starts to trade higher. Trades higher into that key higher time frame, premium PDRA, with a buy-side liquidity pool resting right below it. We take the stops here, price starts to trade higher into that key high time frame key level right here, with stops resting just below it, buy stops. So offset distribution here. We trade down, bullish for value gap here, traded through, leaving a bearish fair value gap here. Institutional sponsorship coming into the market. We can see a offset distribution, then a retracement back into this inverse fair value gap here for redistribution lower. So the bearish scenario here, opposing to USD CAD. And at this high here and this high here, we can see an SMT with USD CAD. So an SMT with currency futures and the Forex pair. And okay, so I'm not going to go deeper into that for the public. However, you can do your own studies on that. Now we have a, well, right here, we call the shorts here and here on the currency futures, which led to the longs called in this candle here and this candle here on USD CAD, aiming for this low. And that was the complete breakdown, and from the foundation to the actual execution and to Tom's live streams, calling everything live as it's printing. This was the foundation, the backbone to all of that. So I hope you guys enjoyed this video, this breakdown, this teaching by me. If you did, you know, like and subscribe, and I'll keep posting more of these, yeah? All right, guys, have a good day.